Good afternoon to all of you. This is Ranjan from smartfinancing.com. So this particular video, I'm going to describe how you can use the volatility and Fibonacci method to analyze the Bitcoin trend. So to analyze the Bitcoin trend analysis, how you can use it. So as all of you know, this is my innovation in the year of 2009, and successfully many of you are using it in the stock, commodities and currencies as well as in the index. The same method can be utilized in the cryptocurrency also, but in a different way. So the same method, I'll be just telling it how you can use it. So I have taken the Bitcoin, I'll just analyze, and some exceptions are there, some changes are there. We have to make those changes and make it. So to know about these changes, first we need to understand what is the challenges we have while analyzing these crypto prices. So this cryptocurrency, whenever we are analyzing, we need to understand what is that instrument is. First of all, the cryptocurrencies used to have a huge annual volatility. It is not like the index or stocks. Index or stocks maximum they can go to 30 or 35% or 40% in a rarest case, and in majority cases they will be trading at less than 20, 10 to 20, that annual volatility range. But these cryptocurrencies having a annual volatility sometimes above 50% and sometimes near to 100% also. So this is the first major challenge while analyzing the trend of cryptocurrency we face. And most of the technical indicators, MACD, Bollinger Band and other things used to have a very less accuracy in the cryptocurrency price analysis. And these crypto prices used to react the events, news or any other developments very quickly. Very quickly they will react. And since it is a 24-hour market and 24-hour into 365 days they trade, so 365 entire year, no Saturday, Sunday, holiday, nothing will be there. So they will be trading for 24-hour, that too entire 365 days. So their price data is classified as the continuous random high frequency data. So there is a first, it is continuous random high frequency data, and this is also in discrete nature. So stock market prices, we are thinking that it is a discrete high frequency random high frequency data, but this is a continuous high frequency data. So the data points will never end, it will continue. To solve all these problems, we need to correct those forecasting methods, and we need to split the volatility into different cycles. And then only we can use the Fibonacci method along with that. So that is what we are going to do. So this particular things, whenever we are going to do all these changes and all this analysis, so first you just see this method is very simple, that doesn't require a great science. So I'm just taking the Bitcoin price from the past 11 days. So I need 10 days data for that, since it is a continuous data. So I will not take 10 days, I will take 11 days, and all 11 days data I have taken. So I have taken the ln value to find out the absolute return. So then this is the current. Today I am 29th 11 2024 when I am recording this event. So this is close near to that this price is trading. So it is in the USD form. You can just have a check here also. If you just go to the any of the site, you can find out Bitcoin will be sitting in the top 95,740. So 740, 95, 852. So you can say that 95, 852, we have the value 95, 852, it is 0.25% down. So we can use this same values here, 95, 852. So I just require the, this is as per the 28th data. I want today's data, so I just taken the old record out and I have to put this new record 25,857.2. 25,857, so 95,850, 95,857.20. So it is 95,857.20, 96,344.60 it was there, and it is 0.25% down, and this is what and these prices also will go on changing. So whatever the price is there, we will just put that things and do our calculation. So first we are finding out the ln value, then ln square value, then we will be finding out the daily volatility, which is nothing but the average of ln value minus average of ln square value. So this daily volatility, after these things we are taking a square root, so this gives us daily volatility. So in percentage terms, it is showing that 2.54% per day, and in the yearly terms if you see, it is close near to 49th percent, 50%. It's a huge volatility. So we cannot use this particular volatility. We need to split into different cycles and then we need to use it for our analysis. So how we will split into different cycles? So what is a cycle? First we have to understand. So you imagine there is a circle here and then it has a other circle, and in between this circle there is a gray area. You can see some white areas are there. Then there is another circle. So these every circle is a different cycle. So you can say the price will be in this zone of inner circle, and once it crosses this inner circle, so it will be in this white zone and touching sometimes this outer circle's boundary, coming back, and this same process will continue. Once this circle is being penetrated, prices will go to the other periphery. So this is what the cycle meaning is. So here we will be using a very good fantastic method of cycle. What we will be doing here, every price moves in the 5 or 7 cycle. So we have observed in the stock market, it moves in the 3, 5, 7, 9, these cycles. So whenever the price is near to 50%, you can say in stock market below 45%, we are going for 3 and 5. So since this is 50%, very huge volatility, annual volatility, so I'll be going with the 7 cycle. You can go with the 9 cycle also for intraday. So nothing wrong. If it is above 50%, you can go with the 9 cycle also. So I'll be going with the 7 cycle and I'll split this volatility into 7 cycles. How I'll split it? I'll just this daily volatility, I'll divide it by 7. So now I got the inner cycle and I got that the price can move 348 USD. $348 movement can be expected as per this split volatility. So volatility which was 49% or 50%, I reduced it by 1/7 of that I have taken. 1/7 of that. So daily volatility also come down 0.36, which was earlier 2 point and odd, it has reduced to 0.36. Then I will be using the Fibonacci ratios 0.236, 0.382, all these ratios, and this is my gray zone. You can say reversal zone here. So I can say this 348, once I multiply with different Fibonacci ratios, I got this price range. I'll be adding with this reference price of my last price, what is being popping on the screen here. So 95,773 it has happened now. So 773 also happened now. So few minutes back it was 857, now 773. So what will be the trend now? So you can say once it crosses 95,939, it sets the trend as per the Fibonacci, and once it crosses 0.38 to retracement 95,990, it confirms the trend and it may continue till 96,072 to 96,131. This is the Bitcoin's trend will be if this one be, it is for the intraday trends. this can be the intraday trends. So $348 split value, or 1/7 of the cycle we have taken. Since it is less than 50, if it is more than 50, we can divide this same volatility with 9 and get the inner cycle. So here, so same way, 95,775, the downtrend starts, confirms at 95,724, and this downtrend can continue till 95,293, and in between this is the reversal zone. 0.68 to 0.786 is the reversal zone. So very clearly try to understand, crypto market is not like the equity or index market. It has many unique factors inside it. First unique factor is it is a 24-hour market. Second is it reacts to the events news very quickly, and it has a huge annual volatility. So we cannot use any of the indicators, oscillators just like that. We need to change those indicators, oscillators, or Fibonacci principle, volatility, everything we have to change, which will be compatible with that particular instrument's behavior. So this instrument's behavior is wild behavior. So we have to do a cluster analysis. We have to add some new factors into it so that this analysis will be very good. So this is how you should use the Fibonacci and the volatility method in the crypto analysis. In the coming days, again I will be giving for some other cryptocurrency analysis using the same method. And this is the trend for the day 29/11/2024. Watch out for this thing. And so this is the price, you can say 847 now it has become. So you can say my trend is sitting in this order, 95,939 above the trend is set, and it will go to 95,990. Beyond that, 96,072, 96,131, and if it is falling below and falling below 95,775, then it confirms the trend at 95,724. Means your uptrend or buying you should happen above 95,990, and selling should happen below 95,724. So this is the place you should buy or sell. You should not buy or sell at this trend set point. You should be buying or selling at a trend confirmation point. Once it happens, so this is our reversal zone. This trend will continue 0.618, 0.786, reversal zone, death zone. From here there will be a reversal. If this also penetrates, then you can get the phi level or 1.618 retracement level. So keep following this and see how it works for the day 29/11/2024. Thank you very much. Thank you for your time.